Hello, West Pacific Market Analytics, and just thought it was a really great time to come in for an update as we're heading into the 4th of July 250-year celebration of America, into the ending 300 year cycle of democracy. It's interesting times, and I want to look at that because there's so much going on in the component of time within so much of the cycle data. We're going to look at another pattern that shows a lot around the ending time of this cycle. And there's just incredible information in the data. And so I want to focus on the data sets. Again, I think in the past, we all look back with the would have, should haves, and could haves, but we can't do that. And part of that is because I think we let opinion and what we expect from life to get in our way, instead of just realizing that we must accept our path and we don't control it as much as we'd like to think we do, because we don't. So what I want to do today is let's put aside your own opinion, as I'm going to put aside mine, as we look at these data sets. And I think that's very important. Put out of your mind what you think right here at this point in time when it comes to the economic data. And let's just go through these slides and look at them together and let them make an opinion. Hope you had a great Father's Day. I did. Had a great weekend. Hope you did too. So let's jump into it here at West Pacific Market Analytics. And if you want to get a hold of me, we're still active on the member Discord. If you'd like to join over there, I'd love to have you. On my other videos, there's the email at Destiny, D-S-T-N-Y, T-R-A-D-I-N-G, destinytrading@gmail.com, and I'll send you some information. Or if you need a consultation of your portfolio, I'd love to do that. Get a hold of me for that. I can go over any of your portfolio holdings, and we can discuss my fees for that. Or if you're looking for somebody to join your team on a consulting basis to act as a solid backup to your own data in using my momentum-based modeling in these data sets, get a hold of me. So let's go. Let's stop wasting time here and let's jump into it. So this first model I got here is this idea. We're going into this parabolic kind of blow off here. You can see as we're just, riding right up here, you can see how the market here since 2017-18, you see this corrective move down and then this corrective move down here in 2020. But you notice our V channel was up here. Now, the V channel is very important because remember, everything we're looking at the data sets is a measurement of momentum and the velocity of that momentum. So keep that in mind as we flash through all these data sets and these slides. So you can see that as long as this is above, price or the indicator of what we're measuring has to rise up into it. So you can see we're rising up into it and now we're broken above and we've got this focus signal up top. So at some point this parabolic blow off is going to end and we're going to have to retrench back to the norm. So that's important. So we're watching that. So, you can't be talking about tops, right? As long as this trend is continuing to go up. Now, you notice we got some small corrective moves here on a velocity break and a velocity break. And then, of course, a very big velocity break here and a flatline trend with the 2022 correction. So there's a lot of things we can use to look ahead at what has to happen. So you can see that exact same model. Now I changed nothing in that data set. And you can see we're looking at the 1997 to 2003 thing. So block out everything you see here on the right side. And you noticed here on the left side how the red indicator we looked at that last model was just rising into a parabolic blow off. Everything looked clean. And then notice how radical it got on the right side. So in other words, everything you just saw in this model, this clean looking rise, in this model I changed nothing. So at some point we're going to see something out here on the right side that is going to show us what is going to happen. So you can see here off the 2000 top where we had this parabolic blow off, and then the data just completely broke down. And you notice as it broke down, price followed, and look how it topped out. Again, you see right here, it topped out above the V channel, and then it collapsed back down to the mock trend. Above the V channel, and then needing to collapse back down here to the mock trend, which will put us back down about 3,800 as the model is set up right here. So I want to show you here, we're looking at a measurement of the total market here. So I've noted here, this is the trend of the total market, and you notice the velocity of the total market has been draining since 2023. So this is the market, and then since this breakout in 2025, this is basically 10 stocks. This is all the AI and some big bank stocks, but it's a very limited group of stocks that have continued to rally out of this. And you notice that we are now seeing the velocity continue to break lower, and I want to watch to see if this really starts to break down, because that'll say the total market is collapsing and that the 10 stocks, so we're mispriced, right? We shouldn't be, the market here and 10 stocks are floating. So it could be a pretty aggressive move down when these 10 stocks decide to get some profit taking locked in. Now let's look at this idea in the compact here, because I think this is really important. And the model is 100% correct. And again, that's not my opinion. That's my understanding of 20 years of research into these data sets, and not only in development work, but obviously in trying to understand how they run and what the data represents. That's the more tricky part, is understanding the rules of the data sets, because everything has rules. And once you understand those rules, you can have a 100% future predictive data model. And that's what we have here. So you can see here, you notice in the big correction from 2000 down to 2003, you could see the velocity was draining, the trend was draining. So we were above the V channel and we fell back into the V channel. And then notice this entire time, even way back here out into time, this measurement could go back to even the low in 1943, that we've had nothing but rising momentum velocity, or the V channel is inflating. So here is our rising momentum. It's a channel, right? And it's inflating until it topped out right here in 2021. And then you notice we've now got a bear cross ongoing. And at some point here ahead, the momentum of circulation of the dock is going to roll over and head down. So we've gone from a rising V channel, and now we are entering into a falling momentum velocity channel. So when you get this shift, you notice how price went here, we've broken out above, so we can't price above the V channel. The next corrective move will most likely bring us below the V channel and then rally back up into it, and then we're going to begin a process of working lower. Now again, we've got to see this trend drain, right? This trend's going to have to drain, and then that will dictate how far it can go down. But the V channel is pricing right now back down here to this 15,000 level on the compact. So that is what's going on. Now you can see that same model applied in Bitcoin. You see this idea, right? Rising velocity momentum, right? So here's Bitcoin rising 2023, 2024 in the rising velocity momentum, or inflating. And then you notice exactly looks just like the compact, doesn't it? You see the mock channel finishing up, the bear cross here, and then the V channel now creating a falling velocity momentum or deflation. So we're going from inflating or inflation to deflation. And then you notice at the top how it broke out, formed a topping pattern, nice head and shoulders, triple top up here, and then the velocity drained and the trend drained, and lo and behold, Bitcoin fell into the channel. So there's proof of concept. The compact is going to do the exact same thing. And by the way, Bitcoin is not done. It's going to continue to fall. Now let's look at this idea of time measuring the velocity of the market over time pulling up on price. So in other words, we are measuring here this red indicator. Now, we're not going to get into what these indicators are because that's obviously not so important as I display these to all my members on Discord. What's important is to understand how they run and what they're telling us is going to happen next. So you notice the momentum topped out on this particular model in mid 2021, but we still had the velocity rising, and we still were here in 2021. We still see price was right here, or this red indicator that we're measuring, that it could still price up here in this portion of the V channel. So you notice here we had the same idea, right? You notice the crossover. So way back here somewhere pre 2016, we had the mock forming the finish, coming down to the bear cross, and then working lower here, right? So again, you notice how this red was topping out, came oversold, and then has to work. So every time you get a really deep oversold, here's that little corrective move in 2019 with that big spike down, you knew red had to go back up to the channel. Same here, spike below the channel, it had to rise again. And again here in 2022, where was the channel? Where was velocity? You notice velocity for this indicator never stopped rising even as red came down. You see right here? So it had to rally back up. Again, deep, had to rally back up. Didn't get so deep, but it still had to rally back up because what we're watching now is, and you notice price is all the way at the top. You cannot go any higher in this market. We were within weeks of a major top because this took so long to form. And you notice now we went from an inflating velocity situation to a deflating velocity situation. So what'll happen is this will now go down into the channel, pull down on price, and then do the same thing as you see here. But now it's going to start working down over time. So this whole thing's going to take time, right? Because I think in the next couple of years, we could come down and retest the 22 lows. And then what we've got to do, and I'll show you in a moment, we have to form what I call a roof pattern. And we'll look at that in just a moment. And again, you can see it here in another model. This is a long-term pattern showing the completion at the edge of a deflating velocity. So again, same idea, right? You see this mock topping out here actually in 2009. But notice we're measuring this red, and the price of the market was way down here, and the channel's way up here. So price has to rise as long as the channel's above, because even though the red indicates corrective moves, since red can continue to price upward into this channel, price is going to have to continue to rise over time until price is above the channel. You can't have that. So this is a major top. Price is now going to enter back down here into the channel. It can't be up here. This is absolutely impossible. It is because I told you out of this low here, this was about 10 stocks pulling it up. The total market is priced down here. So pretty soon, within the next couple of weeks, this is going to finish and we're done. This is not just a minor top here. This is a major top, folks, because look, we've gone from inflating velocity, crossing over, and now into deflating velocity. And you notice this deflating velocity is going to take us well out into the mid 2030s. This is serious stuff. Now here's an idea that I call a three peaks pattern. It's a very, very important pattern, and it includes a model that I call the M equals A. Now, I've talked about this in the past, and in a lot of ways, it kind of blinded me a few years ago because I kept searching for this thing called the J top. Now, that was a mistake because even in here, when we had this rally out of the 2020 low, I was thinking this could have been a J top. Now, the reason I was looking for the J top too soon into this whole last spurting blow off AI rally was because there's a time component of 17 years as a measurement. I haven't put it in the model here because there's a measurement to the J top. But where I think I made a mistake in my thinking, I don't think at all that this pattern is out of play. I think the time extended simply because they printed so many trillions in 2020, and this particular model was created decades and decades ago in time by one of the masters of technical trading, that it extended this final blow-off rally here which also could have even had to do with things like an Elliott wave count and 3-hit patterns in the channel. So you can see here at the B high, we hit the channel, but typically for a major high, you need a triple hit somewhere on the channel, and you notice now we have 2 more hits above. So I think that the high in the market is complete. So now we're going to see how quick it falls. So now what we've got to do is we've got to put in this roof pattern here. Okay? So what we need to do in putting in this roof pattern is what we're going to have to form here is a head and shoulders top. So the J becomes the head. We've got a shoulder over here and a shoulder over here. So that says we're going to come down, like I said, test that 2022 low and most likely rally up to put in a B top around sometime out into late 2027, even into the elections, maybe, I don't know, or maybe we're going to get the C wave down into the elections. But the whole pattern calls for a 90% drop in the market. So we're not going to get into it too much more, but the pattern is perfect. We had to have a 3 peaks over here in this section to start out. And not only does the M equals A model be perfect, but we've got a giant megaphone pattern in play with a perfect A, B, C, D, and then that would make an E below. But that is not even part of the M equals A pattern. So there's 2 patterns in play here. Now there's 2 large corrective moves in the pattern. One is the D to E. So forget about the BC because that's not the pattern. We start at A, then we go to B, then we go to C, then we go to D, then we go to E. And the D to E is the major corrective move in the pattern. And then you go F, G into the first floor, H, I, and then up to J. And then from J, you go K, L, M equals A. So you get a massive A, B, C corrective move, plunge move. So the 2 major crash moves are the D to E and the J to M equals A. But we'll go into that more later. But it is very, very important what I just shared with you there. And do I believe it's right? We'll let the data decide. It seems absolutely not probable, doesn't it? But probability is there in the model, and the model does not predict events. It just says that some sort of major event can happen to cause that to come into play. Now, if we look at the bond market also has a major topping pattern. You'll notice back here in the 2016 to 2019 period, we put in the shoulder perfectly again in the V channel. We broke out above, which we can do, and we put in a really high head pattern here, and then we came back down. And this actually probably should have completed the right shoulder, but somehow we were able to break out again and now extend out here, and we are still below the head, so we still got a clean right shoulder. So I'm watching that, and we even got a mini, you see, head and shoulders pattern in play in the bond market over here with the final right shoulder just completing. And you notice the V channel is all the way down here. I think we could see at some point a collapse in the bond market. Now remember, we have reached peak debt where compound interest starts to get into the way. And then we start seeing radical things coming out of the government, like what we're seeing in all this tax the rich. That is the kind of stuff you see in desperation of governments when we've reached what I call peak debt in the debt cycle. That's always happens that way. And a lot of times it ends in world war, but we're too early for that right now. So let's not even go there, right? Now here's corporate bonds in the China. The China property markets have already collapsed, right? But its bonds somehow have gone parabolic. But its bonds are all corporate bonds. So I'm watching this corporate bond model, which is about 60% corporates, and then government and quasi-sovereign bonds here in China. And you notice China had a momentum top in the bond market, and now its V channel has collapsed going out here into 2028. So there's a good chance even what this contagion ahead could be about is a lot of things. It could have to do with the Chinese bond market, and it could also have to do with Japan. If we get time, I'll jump over to that. We're already 20 minutes into this. We'll make this a long video, and let's keep going. And I think gold is done as well, because again, you can see gold rising up crossover coming down. So gold had to price right here, do you see? But it had to do this blow off because it did a perfect cup and handle pattern into the final blow off high. The extension was here. You can see it reached the extension and it blew off above a little bit because it hit the black line, which it had to do. I mean, gold is pricing now to get back into the V channel back down here at 1800. So yes, gold can drop at some point back down to 1800 and even have a bigger collapse heading out into the 2030s. Now, how is that possible? Because in a debt collapse, or what can sometimes be called a debt depression, it's a flight to get liquid. Now, here's another measure I'm looking at in the bond markets that involves the spreads. The spreads are important because that is very, very key. And you can see here back in 2009, you see how this thing went parabolic, right? And then we got a topping signal. And then we got a low signal here. And then we got another major topping signal here at the 2020 move. And now it's all flushed out to a brand new low. So I'm watching this focus here because when this spikes up, the market doesn't like that. So there's a lot of things we're watching in the bond space. The other thing is the market is insanely expensive right now based upon its yields. Yields have hit an all-time historic low down here. But what you have to remember, yields are the lowest they've ever been. Now look at back in the great times, as I like to call them, the 70s and 80s. Look what kind of yield you were getting here on holding stocks. And you're getting no yield down here. It's non-existent. So you're holding stocks for no reason. You can get better yields in treasury bonds, but even they are probably risky. We're at the 250-year point in the late stage of the debt cycle of the failing democracy. But they're still safe for now, and at least you can get a better yield, and you're not getting any yield in the markets once this finishes off. But the difference is, you notice this low, when lows hit all-time lows last time, we only had 5.7 trillion in debt, and today we got 38.98 trillion in debt. But you'll notice it's interesting because when the yields start to rise, obviously the market corrects. So here it corrects, you see it rising, corrects, comes down, and then rising, corrects. So we're going to be watching yields. Yields spike when the market is correcting. Now let's look at existing home sales here because we're going to run out of time and I've got so many slides. We'll just have to cut it off, and I probably should have done this in a part 1 and part 2. So maybe we'll cut it off right here at the existing home sales. We'll call this part 1, and then I'll come in and we'll do a part 2 so the 2 videos don't run too long. That might not be a bad idea. So here's the existing home sales. Now you notice this, the same idea, right? Going all the way back to 1974 here. And back in 1974, when we had all these issues going on, you'll notice the huge corrective move in these existing home sales. And I remember, I was around back in 1982. Yeah, I've been around a bit. And we had this big corrective move in existing home sales. I remember in 82, you could buy real estate for so cheap. I remember buying a condo back then, a townhome in Orange County that was, the townhome I bought, it was $180,000 new, and we bought it for $125,000. Less than it cost to build. We're going to see that again. If you own real estate right now, you're going to get pounded. And you can see here the big financial crisis. But notice what's so interesting. We had to have this big corrective move. Why? Because where was the V channel? It was too high above. So it came back into the V channel. And notice existing home sales are rising right up in the inflationary channel, what it's supposed to do. Velocity is rising right up. And then notice the financial crisis started, the crash in the market didn't start until 2007, right? But you notice existing home sales topped out in 2005, and they topped out where they had to top out. They topped out at the top of the velocity channel, right at the momentum of circulation indicator, and then they started coming down, you'll notice. Velocity draining, velocity draining, velocity draining. And you notice when we got right here, the market then followed down the velocity. But where were we priced now? Below the V channel. And we had to rally back up. And we did. So we're in the V channel here, and now you'll notice we've gone in. So we came up, we came in. You notice again, we topped out here on the dot curve. Didn't like that because it can't go above. So remember this, when we're looking at all the models, they all work the same way. And you notice we fell back into the channel here. So that was our 2022 corrective move, right? It was all about existing home sales. And now look at this crazy sideways wedge heading into the wall of the directional of circulation, or the dock, which I call it. This is directional circulation, and the other component in pink is the momentum of the circulation, and the two of them forming the velocity channel. And lo and behold, look what's happening going out into 2029. Well, let's push that out into the 2030s. The velocity of the channel is completely collapsing. This is going to be one of the biggest collapses in history in existing home sales. So let's cut it off here. We'll pick it up. We'll make this part one. I've still got other things I'd like to discuss with you. So if you're interested, I'll put out a part two. Don't got time for that here right now this morning, but I'll crank out a part two, and you can come in and take a look at that, because there's some other data that I think is very important for you to look at. And perhaps we'll even look at some of the trading models that I share with my members on Discord. But get ready. We're getting ready for a big down move. That is certain. But have yourself a great day, and I'll get back at you with part two.